Hi, I'm Alastair Greenfield, an Associate Director from WY Partners. Today we're joined by Dan Berry, CEO of UNRVLD, an award-winning independent digital agency. So Dan, welcome. How are you doing?
I'm good, Alistair. Thank you for inviting me today. Looking forward to having a chat.
Cool. So I think the most logical place to start is probably UNRVLD. Are you able to give us a quick background into the rebrand and what this means for the business?
So I originally was part of a business called Kagul, which was founded 20 years ago. And when I joined 10 years ago in a different position, over a period of time, the business evolved, grew, did great stuff. And what we decided to do is go through a process, which I'm sure we'll talk about in a bit more detail later on. But that process concluded really well, and as you mentioned earlier, moved forward into Delete and acquiring Delete. And really, the market probably wasn't going to react too well for an ongoing basis saying Delete / Google. So there was the need to consider our name and our brand, but equally, it was more than a rebrand. It was really to represent who we'd become as a business, bringing Delete and Kagul together. And I think Unrivaled it was a natural name to really put together something that meant very much who we'd become, where we are, and where we want to be, which is unrivaled in name, unrivaled in nature, in terms of what we do, the people we work with, the partners that we have, the clients that we work with. So it's not so much about us, actually. It's about putting forward a set of services and a service offering that really resonates with our clients, with our partners, and is a great place to work. So Unrivaled's what we came up with the name, and so far so good. The reaction has been very positive, and we're looking forward to taking things forward.
Brilliant. No, we've seen all the videos and all the content go live on LinkedIn. It looks really cool. So I'm sure it'll be exciting times ahead for you guys. So if we now wind back to what you were talking about in terms of the investment, and when you were thinking about exploring the conversation, what made you decide to go and speak to private equity, and specifically, why did BGF end up being the successful party?
Personally, I felt that there was a lot more to be done and experienced within the company under our own steam, without necessarily being brought into a trade buyer situation. So for us, it was a case of what can we do to realise our vision? What can we do to take the strategy forward? And myself and a number of my senior management team now were of the like mind, and so it was more about investment. So with that in mind, it was what is the best structure, what is the best way to look at private equity, and we went through a process whereby we appointed some advisors, we went to market, we saw what the interest was, which was great, and even with the pandemic, we received several responses. To take it on to why BGF, well, BGF were engaged throughout the process, really keen and excited to share in our vision and our ambition to take the business forward. Has a very unique way of approaching investment from my perspective as well, in terms of the amount of investment they make and the constitution that they like to follow. And one of those things, all those things, come together to really mean that they're very much backing the management team. You know, it's the analogy of they're backing the jockey as much as the horse in some respect, and that kind of backing that investment was exactly what we wanted. We wanted that, support and that confidence in the team to take things forward. And also, I would just say it's nice to, have good, chemistry with people that you think that you can work with. So, so all those, lots of different reasons, but I guess boiling it down to its core reasons, it's the type of deal and structure that BGF offer, and their total support of the management team to realise whatever that team's ambition is.
I guess another question on business owners' lips is when they think about private equity investment, is how much has BGF's entry into the business changed the day-to-day running of the operations, if at all?
And with the kind of investments they look to do, they are very much looking at the management team and looking to continue what is an upward trend of success. So there's a kind of, if it isn't broke, don't fix it kind of mentality, and they're very much not an organisation that I feel wants to interfere with the secret sauce in terms of what the team is doing and what they've done in the market to take the business forward. So their role is very much one of supporting, guiding. They've helped tremendously. We've worked very well over the last year. That's all come from the BGF network as an example of value add. And they're very much a non-exec role. They're there to guide and support the business, and it's worked really well. So, yeah, absolutely. I was kind of, I want to take the business forward. I don't suddenly want to change lots of things. I definitely want to evolve the business. I definitely want to grow it. I want to have the benefit of if you like, striking out on our own to some extent without the original founder, who's still an investor and a big supporter nonetheless, but still, have that control in the business. And BGF have absolutely lived up to that in that process so far in the first year.
Brilliant. Well, it sounds like it's been a real success story for you guys at Unrivaled. So on that point, what specific advice would you give to other agency owners out there in terms of thinking about running a fundraising process?
I mean, first and foremost, professional advice. You need an advisor. If you're gonna go to market and look at whether it's trade or fundraising, but fundraising in our case, you need somebody who understands obviously the corporate finance world and fundraising. An equally second important thing for me, in my experience, is somebody who's familiar with your domain. You can still be a very good corporate finance person, for example, but we were in a digital industry. Perhaps getting somebody who's used to disposing of FMCG businesses isn't necessarily the right thing because of the connections and the people that help and understand the opportunity that you bring to the market. So somebody with domain experience is absolutely essential for me. Those two things together then also lead out to further guidance and help along the way. Another piece of advice I would give is, if you are going to go on a strategy where you think you're going to have multiple acquisitions, it is good to have that stable of people that you trust. So as a result now, I can, as something progresses quickly, I can pick up the phone, talk about the characteristics, and we're all on the same page very quickly about what might be needed to move a deal along, whether it be into heads, into diligence and commercial support, all those things. They just happen really quickly, and I think that's the benefit of not having to go out to market every single time. So I think time spent in chemistry as well when you're selecting your advisors probably will be well served, especially if you have future transactions in your mind.
Did you experience having to, I guess, back when it was Kagul, were you having to put aside some client work and prioritize the fundraising process? How did you manage all that?
So we were very much in a position where our house was in order. And so, things like data rooms, which you've probably seen more than I've had hot dinners over the years, Alastair, but data rooms of all your contracts and financial information, having all your stuff in good order means that a lot of that overhead can be mitigated to some extent. But equally, there will be overheads. But I think, personally, well, let's take you guys at Y Partners as an example. You obviously are very experienced in this particular industry. So whereas I was kind of dreading the first conversation of telling you about the business, telling you about digital, all those kind of things, you kind of picked up on it really quickly, and we were able to get to the heart of the matter very swiftly about what the business was, where its revenues were, where the opportunities were, where the risks were. And it just made it a lot easier, and so therefore the overhead was far less than it could be. But fundamentally, as good as you guys can be and were, it would have only gone well if the prep was there. And that would be another thing, going back to your previous question, that it's absolutely vital that you go into a process with your house in order. And to be honest, an advisor will make sure that's the case as part of preparing probably your IM to go to market as well.
Cool. So if we sort of park your investment from BGF now and sort of the investment process and talk on to move on to Delete. How did the Delete acquisition come about? And given it happened in quick succession after the BGF investment, was there any factoring in of this acquisition when you talked to BGF?
In many respects, last year was a bit of a crazy year for us in the sense that we kind of invested. Did BGF had the Delete acquisition and a pandemic, so we didn't do things by half last year, that's for sure. But when I think back to where was the start, well, I think when you go back to the point around debt raising, you don't go into that without having a view on what you want to do with the business and the strategy and the long term plan that you have in place. And our strategy was very much anchored around, really strong organic top line growth, but some acquisition and as part of, if you like, a buy and build strategy. So that was always really important. So when we were putting the plan together and looking at the overall strategy that we went to market for BGF, we obviously were really clear in our mind that we had a view on what acquisition targets we wanted and what kind of characteristics they would have. Delete, I've known for many, many, many years. I've always had an admiration for them, and in that particular instance, the deal origination was all natural in the sense that I reached out to the founder, Mark Walton. We had a chat, and it kind of went from there. Now, that actually was taking place at the same time as the process to seek investment in the business. It was always our intention to move forward with the acquisition of Delete, given that we had a healthy balance sheet anyway. But it made sense to us to work the acquisition into the process in the sense of what the potential benefit would be to any investment party. And so for BGF, they were extremely supportive. They made sure that they gave the benefit of their advice and wisdom during that process. And actually, at one point, we were completing the diligence on the original deal to invest in Kaggle, and also looking to do the diligence on Delete as well. So the one followed hot on the other precisely for that reason. We were running parallel processes at one point, and it worked out really well in the sense that we completed in July and then followed up with October. So I would say that gave me a bit of a crash course in doing all this kind of thing. I picked up a lot of experience, which hopefully I'm conveying across a bit today in our chat. But yeah, it absolutely was something that BGF supported. In terms of the second part of your question, that having BGF as part of the process, it gave us a lot of options in terms of deal structure, what was equity, what was going to be debt, what was going to be cash, what was deferred. All those things came into play, which meant that we could put a really good deal on the table for the founders and the management team at Delete. And it kind of worked itself really well in the context of the overall structure of the business as well.
Cool. So obviously the rebrand Unrivaled is a really exciting development in your business. In terms of your growth strategy over the next few years, what does that look like, and is it likely to involve further M&A?
So we're at the point now where we are thinking about the next stages. We do have a view that absolutely top line organic growth is a big thing for us. That's absolutely the lifeblood of any business, is to have strong growth from your own products and services from within the business. But there are definitely areas that we would like to develop in the business, from capability expansion, market consolidation, and geographical diversification. So from my perspective, we are looking at targets that are overseas. We are looking at capability builders within our space, within the experience platform sector, and we're also looking at other services that we think will be complementary. So we do expect to complete, at least another 3 or 4 acquisitions over the course of the next three or 4 years, possibly more. Depends on the size and nature of them. And our ultimate target is to grow to a business that is several hundred. We want to get to that size. We don't want to go beyond that because we feel that would cause the business to lose some integrity in terms of its offering and its culture and its ability to focus and work really closely with our customers. That kind of customer obsession that we want to have in terms of delivering great products. So yeah, further deals are in the pipeline. Very excited about doing that. I think again, if on the basis of our chat today, one thing I would say, it can be quite addictive doing deals. You have to be kind of careful that you you don't kind of get the red mist on every single thing that, oh, this is exciting, we'll go for it. It's keep calm, keep cool, make sure you're focused on the right targets that are good for your business. Once somebody sees that you've done a deal, you'll get lots of speculative IMs and teasers about where to do business, and you just got to keep focused on the plan and make sure it's the right business for you.
Amazing. Well, it all sounds very exciting. And I guess from our perspective as advisors, we've seen a bit of a shift in the digital media or broader digital agency space over the last couple of years. Getting quite a bit of private equity interest, yourselves being one, Brain Labs, Crowd, Sideshow, IDHL, all these that used to be independent agencies 3-4 years ago have now received private equity investment and going on similar stories to yourselves at Unrivaled. So how do you see the digital media market today, and where do you think it's going on the back of these investments from private equity?
I mean, you're absolutely right. I think there are a number of factors at play. I think there is some of the prevailing winds that have come prior to pandemic about what customers need and what that's doing to shape some of the market. And if we look at some of, let's say, the big networks to start with, we've seen a definite desire from them to simplify their offering. WPP is a great example. Huge family of agencies that are now kind of simplifying and coming under single brands because big organizations want simplicity and clarity and specialists in their interaction. So I think a lot of that has been driven by the clients and the customers in our community. So I think that will drive an ongoing trend to see some need to have clarity of offer and service. I think that then drives also an element of what you're seeing in the market from an M&A and consolidation point of view, as companies like ourselves and some of the others that you've mentioned look to consolidate, look to bring service offering together cleanly in a joined up fashion that they can bring a total service to their clients as well. And I think there is also an element, and this is just a personal view based on my interaction, but let's put a round number on it, 20 years in since the dot-com bubble. And from that perspective, we've got a lot of founders who've 20 years in, who've maybe ridden on that wave or created great businesses, and they're thinking about de-risking, and therefore there are good opportunities out there in the marketplace, which mean that there is probably the natural point now for some consolidation to happen in the market. So I think if you dot some of those things together in terms of where the model's shifting, where what's happened with the age of the industry, and also the pandemic itself with a degree of survival of the fittest. Unfortunately, some agencies have fallen by the wayside just because they've maybe been a bit unlucky in the industry they serve and revenues have dropped. All those things together, I think, are pulling together to create quite an interesting landscape at the moment. And I think the next couple of years will be very interesting to see how that service to company model works, how technology and innovation are going to continue to shape things with AI and some of the other innovation as a service that's popping out everywhere now, and the fact that the pandemic has really driven a lot of innovation and digital creativity out there over the last year. And I think we're all kind of still catching up to that a little bit, but hopefully the kind of horizon will be a bit clearer. But I certainly think from within the space that we operate, there is absolutely a lot of opportunity out there, and it'll be interesting to see where the agency landscape and whether some of the names that were there 4 or 5 years ago will still be there in a year or two as there's a degree of consolidation that goes on.
Thanks for spending time with us today. It's been brilliant to chat to you, and obviously superb timing with the rebrand of Unrivaled. Really, like I said before, really exciting times ahead for the business, and we look forward to hopefully working together again in the near term and hearing more about the success stories of Unrivaled.
Absolutely, Alastair, my pleasure. And maybe we can revisit things in a year or so and see where we are again. Thank you.